The precious metals market is deeply bearish, driven by a strengthening US dollar, rising interest rate expectations, and fading geopolitical risk premium. Gold and silver are experiencing their worst quarterly performance in years, with institutional forecast downgrades adding to the negative sentiment. Watch for the primary risk, which is further tightening by the Federal Reserve, with Bank of America projecting 3 rate hikes. This could drive the dollar even higher, pushing gold below $4,000 and silver below $60, extending the current downtrend. Key technical support levels for gold and silver, combined with smart money accumulation and silver potentially pricing in the first rate hike, present tactical entry points for a potential rebound or long-term accumulation. Investors should exercise caution and consider scaling into positions only at key support levels, focusing on long-term accumulation for physical gold and silver while closely monitoring Fed policy signals and dollar strength for confirmation of a trend reversal. Deutsche Bank cuts gold forecast amid price slump. The forecast revision by a major bank reflects a broader bearish sentiment shift among institutional investors, potentially accelerating the current downtrend as market participants adjust their expectations. And before I go further, silver is trading at $58. This is pre-market, and gold is at $4,009, just like what I just said, falling below $4,000 key level. And yes, this is one of the worst in a very long time. Gold extends fall to near 2-week low on firm dollar. Silver hold losses on hawkish Fed bets. And here's a positive note. I'm personally a believer of commodities, both gold and silver. The characteristic of these two metals haven't changed. So think long, do reevaluate your portfolio, rebalance where needed. But unfortunately, the current scenario is not favoring the commodity market. And we also had a tech sell-off. Gold and silver near key support levels. The proximity to key support levels suggests a possible inflection point where short-term traders may step in to buy, though the overall trend remains bearish amid rate hike risks. Ceasefire holds amid Iran-Israel tensions. Gold set for steepest quarterly fall in a decade. This sharp decline underscores the severity of the current sell-off in precious metals, driven by shifting monetary policy expectations and a strengthening US dollar, as reported by Money Control. If you pay attention, overall, pretty much the same news. Geopolitical, Fed rate hike. Gold tests 4,100, silver breaks under $62. Definitely not looking so good at this very moment. But again, on the positive side, think long. Think in cycles. Gold and silver tumble as rate hike fears intensify. Silver prices struggling more than gold. Silver's underperformance relative to gold highlights its dual nature as both a precious and industrial metal, making it more vulnerable to economic slowdown expectations and monetary tightening. Profit booking could trigger a rebound near key support. While the trend is bearish, key support zones often attract buying from traders who anticipate a bounce. This presents a tactical opportunity for short-term traders to capitalize on potential volatility, though upside may be limited by the broader macro pressure. Silver may have priced in first rate hike, offering entry point. If silver has already discounted the first rate hike, further downside may be limited relative to gold. This could present a buying opportunity for long-term investors who believe the market has overreacted, though risks remain if more hikes materialize. Gold accumulation by smart money at current levels. Smart money accumulation during a price decline can signal a potential floor, especially if macro conditions stabilize. This provides a positive signal for long-term investors considering entry points, as institutional buying may support prices in the medium term. And here it is. Global AI sell-off steadies as US tech futures edge higher. Ripple effect. Tech market meltdown could roil consumer spending. Pay attention to this. Global tech sell-off rattles markets beyond stocks, hits gold and Bitcoin. This demonstrates the contagion effect from tech equities to other markets as investors shift to safer assets like the US dollar. The Australian dollar also slumped, indicating the broad impact on currencies and commodities from the market turmoil. And I want to talk about silver just a bit before I end. Again, silver is sitting at $58. Won't be surprised if it goes below. Pretty crazy to see. All-time high was at $121 and it literally fell back to $58. And unfortunately, if you look at the miners, they'll take a decent hit once the market opens. Unfortunately. But again, on the positive side, think long, maybe accumulate a lot more down the road, because the characteristic of these two metals, gold and silver, haven't changed. And it kind of feels bad. It kind of sucks, the right term, especially if you're holding any of these commodities. Let this be a learning lesson. That's all I can say. Now come back to this. Silver sentiment bearish to cautious. Silver has fallen to 6-month lows amid rate hike fears, from Bank of America's 3-hike projection, with the metal testing a critical 50% retracement of its all-time high. The gold-silver ratio at 63.9 signals historical undervaluation, and silver's test of the 50% all-time high level offers a potential long-term entry point for patient buyers. Monitor the $62 support area closely. If it holds, consider scaling into long positions with tight stops. If it breaks, stay cash until a bottom pattern forms. Guess what? Silver is at 58, below $62. Prince Silver drilling expands at Nevada Project. Miners are still at it. Silver testing 50% of all-time high. Will bulls step in? Traders are watching closely for confirmation. Gold slumps while silver gains slightly in futures trades. 3 hours ago. Almost latest, but right now, if you notice, again, the price. Silver hits 6-month low, then rebounds towards $62. Silver price is slipping, struggling more than gold. Is it a good time for retail investors to get in? The gold-silver ratio at 63.9 also suggests silver is historically undervalued relative to gold, with mean reversion strategies historically yielding strong returns. These factors point to a potential opportunity for risk-tolerant, long-term investors. However, the short-term outlook remains bearish. Silver hit a 6-month low before rebounding, and the broader trend is pressured by rate hike fears that make non-yielding assets like silver less attractive. Valid points. Silver has been declining more steeply than gold, and the market is described as bearish in the short term. Ladies and gents, this is all I have for today.